This simple strategy turned $10,000 into $100,000 in just 5 years, without paying off debt. And what's even more surprising is that it's based on Warren Buffett's advice. This is not financial advice, but rather an exploration of an unconventional approach to debt management. And what I'm about to show you will change how you think about debt after 60. As we navigate the complexities of personal finance, especially in retirement, it's essential to consider all options for managing debt. With U.S. oil prices climbing above $100 and the current economic uncertainty, making informed decisions about our financial futures is more critical than ever. In this video, we'll delve into the concept of not paying off debt after 60, inspired by Warren Buffett's investment philosophy. So, let's dive in and explore this strategy further. So, why might not paying off debt after 60 be a viable strategy? According to Warren Buffett, it's about understanding the concept of opportunity cost. By not tying up all your money in debt repayment, you might be able to invest in assets that could potentially yield higher returns over time. For instance, historically, the S&P 500 has provided average annual returns of around 10%. But here's the part nobody talks about: the importance of having a diversified investment portfolio to mitigate risk. Let's look at some real data to understand the potential impact of this strategy. According to a study by the Federal Reserve, the average return on investment for a diversified portfolio over the past decade has been around 8%. Meanwhile, the average interest rate on debt has been significantly lower, often below 5%. This disparity highlights the potential benefits of investing rather than solely focusing on debt repayment. However, it's crucial to consider the risks and ensure you have a solid emergency fund in place. So, what can you do instead of paying off debt after 60? First, assess your financial situation and create a balanced budget. Then, consider investing in a diversified portfolio that aligns with your risk tolerance. Remember, this is not financial advice, but rather an exploration of an alternative strategy. Always consult with a financial advisor before making significant decisions about your debt or investments. By understanding the potential benefits and risks, you can make informed choices that suit your financial goals. Thanks for watching. If you found this video informative, consider subscribing for more content on personal finance and investing. In our next video, we'll explore more unconventional strategies for building wealth, inspired by the wisdom of successful investors like Warren Buffett. The key to financial freedom is education and taking control of your financial decisions, and that's exactly what we're going to discuss next.